The calls for a stock market correction are beginning to blow through Wall Street, but my guest today has been calling for one for a very long time. Please welcome to StansberryInvestor.com, Dr. Marc Faber. He is the publisher of the Gloom, Boom, and Doom report. He's also considered one of the greatest and most respected economists in the world and a contrarian investor. Good to see you again. Good to see you. It's been a very long time.
Yes, a long time. Thank you.
Yeah.
Thank you for having me on your program. It's a pleasure.
Welcome to my home here at StansberryInvestor.com. We're gonna get a lot of knowledge out of you today.
First, I'm familiar with your research, which I find excellent and very well written, especially for individual investors who want to make money.
Well, thank you.
I compliment you.
Thank you. Thank you. On behalf of Stansberry Research, thank you for that. That was not, I didn't ask Dr. Faber to say that. So thank you so much.
Yes, I know that. I wouldn't say it if I was paid.
I know. All right, let's talk the markets now, because it's been such a long time since I've spoken to you. I'm just so curious to pick your brain here. The calls for a stock market correction now coming everywhere from Deutsche Bank to Bank of America, Morgan Stanley, Goldman Sachs. Everyone's saying, you know, we shouldn't be surprised to see a correction of at least 10% here. Why do you think they're all coming out with this now, Dr. Faber?
Well, I think it's quite clear. We have very high valuations by historical standards. And also the market has been a split market, very much like in 1972-73, when the Nifty 50 stocks, these were companies like Kodak, Polaroid, Xerox, Digital, and so forth, they went through the roof. And also Sears, JC Penney, all the ones that today are bankrupt. At the time, they were the most favorite companies. And the rest of the market didn't do anything and actually went down. And so we have today this outperformance of US tech stocks and popular stocks vis-a-vis the rest of the world. The rest of the world is not in a bubble to speak of, because most of the emerging markets are actually down and haven't performed well since 2011 or 2015. So I think we have to be very specific when we talk about the market. There are markets for depressed stocks and there are markets for very expensive and popular stocks. And also when you talk about the strategists, we also have to distinguish there are strategists at Wall Street firms that may be near term or somewhat negative about the market and are calling for a correction. But I can tell you a lot of investors are still piling into meme stocks and other all types of investments. So there's still a lot of enthusiasm amidst the public for anything that moves up. And we shouldn't forget that, yes, liquidity has been tightening on a relative basis, but you look at Europe. In Europe, we have negative interest rates. Negative interest rates, in good English, is an expropriation of money driven by central banks, in other words, governments. And in the US, you have essentially next to zero interest rates on the short end. If you can find a deposit for, let's say, 0.5% for 1 year's time, it's not so bad. But in the meantime, inflation is running, and you tell me what it is. For each household, it's different. But since you have small children, I can tell you that your inflation is running at between 6 and 10% per annum. And for me, that is aging and spends less on going out than before. It's running at maybe 4 to 6%. You understand? But somewhere between 4 and 10%, that's about the inflation rate. So interest rates are strongly negative. So if you come to me and says, here I have $10 million, and I want to come back in 10 years' time, and I want you to invest these funds, would I buy bonds? No. they have a negative interest rate in Europe in nominal terms, and here in the US in real terms. And stocks, I can give you a portfolio of stocks in emerging markets and in Europe that would yield, say, 5% per annum, or in the US, say, 4% per annum. So I'm not that bearish on the entire market, but I think some sectors of the market do not look very strong.
And I want to talk about that with you, about the sectors that don't look strong. But on the other side of the spectrum, right, we have people saying, well, why should we expect a correction? The Fed, won't they come in, step in, and keep saving the day here?
Yes, I've just written about this. I said the Fed is unlikely to ever tighten again,
right,
until we have a huge financial mess, until the whole financial system, political system, and until we have World War III, nothing's gonna change. They are here to print money, all of them. They're all money printers. None of them wants to tighten monetary policies. And quite frankly, they can't. Can you see bonds? The 10-year bonds yields less than 2%. Can you see it go to 6%? What would that do to equity markets? What would that do to the housing market?
Right,
what
right.
did that do to the bond markets around the world and to the US dollar? The US doesn't want the strong dollar. It's negative for the US to have a very strong currency.
And I want to bring up a very important quote from your latest report, but first, just a little bit more on the Fed here. You know, if they can never tighten, you know, let's talk about that environment. You know, and so inflationary, in your view, is definitely not transitory then.
It's unlikely to be transitory for principally the reason that wages, for the first time in, say, 20, 30 years' time, since the late 70s, that wages now are going to go up. Otherwise, people won't find people to work for them, because the government is now a competitor to people who want to work, in the sense that the government hands out money. And now the government has reduced the handouts, but the states can continue. And in my opinion, it's only a matter of time before handouts come again. And so I'm actually more of the view that the risk, it would be risky to have all your money in cash. Now, I'm not saying that a 10, 20% correction in stocks can't happen. I'm optimistic about gold, silver, platinum in the long run, you understand? And they have done relatively well since 1970. They're up from $35 in the case of gold to close to $1,800. So it's okay. It's protected you more or less against inflation. And I think it will continue to go up. But we had now a correction in gold shares of between 30 and 50%. So we can get these kind of corrections. And we had in Europe just now a correction of more than 10% in some pharmaceutical companies. So we'll get corrections. No market goes in a straight line. But I think that you, in order to get a real bear market, you would have to have huge earnings disappointments. But the system is not set up for huge earnings disappointments, because money printing favors corporate profits.
Right. But with companies alluding already to getting hit hard by the Delta variant, couldn't that be expected? Couldn't that be in the near term here?
Yes, for sure, earnings will disappoint and not be as good as the optimist expects. But I don't think that earnings will be a disaster as long as money printing is enforced. But you asked me before about the inflation. That's why I think that inflation is not as transitory as the Fed members continue to lie about. They know that it's not transitory. I can't believe that they're such incompetent economists. I think they're incompetent, but they probably also studied price movements over time and so forth. But I think that corporations will increase prices. When you travel next time, when you go to a hotel next time, you'll see that prices are up. When you go shopping next time, prices are up, and prices will be up for everything, for your babysitter and for whatever you buy for your children and for you.
So just to break it down, Dr. Faber, you wouldn't be, like you said, you wouldn't be all in cash now, you wouldn't be in bonds. Would you be exiting US equities now?
I have very few US equities,
okay,
which you may say was a mistake in the last few years. Agreed. But I prefer, also for tax reasons and other reasons, not to have my money in the US. So I have a portfolio of, I have a large position in REITs in Hong Kong and Singapore. And I have a large exposure in Asian emerging economies. In other words, in Thailand, Hong Kong, Singapore. I know that Singapore and Hong Kong are not emerging economies in the sense, but because they are located within a large number of countries that are emerging, I put them in the same basket. They're more dependent on emerging economies than on, say, the US. Singapore being dependent on Malaysia, Indonesia, Vietnam, Cambodia, and India. And so my exposure is mostly in emerging economies, and I also own bonds. These are high yield bonds. They have an equity character. And most of them are in emerging economies, but I'm not buying bonds at the present time because I think that prices will go down. Also, treasuries in the US, I think they will eventually, the yields will go up. In other words, the markets will overpower the manipulation of central banks.
That said, this sounds like a perfect environment for gold. You mentioned gold before. In the past, we've spoken about it ad nauseum. I know you're a longtime gold bull. You like gold, you like platinum, you like palladium, you like silver. But many would say, Dr. Faber, why isn't gold above $2,000 an ounce? It's a perfect storm for the metal. What is holding it back? You laugh because you know this is the $1 billion.
I'm also crying that gold is not higher.
Yeah.
But what to do? No, but I'm joking. I think that there is no speculation in the gold market. The young speculators are in meme stocks. They are in cryptocurrencies. And I think it's an asset class that will stay. And I think Bitcoin will be the one that will be kind of the standard. But in general, I think that, as you said, gold has been in the near term disappointing. Although I have to point out, in 2015, we were around $1,000. We're 1,800 now. So it's not too bad. I mean, it hasn't done well. And recently, or for the last 18 months, hasn't done well. And also, especially the gold shares have been a disaster. But there are exceptions also in the gold market. But I'd say, looking at the statistics about the exposure of individuals, there is very little interest at the present time, which leads me to some optimism about the prices not going much lower.
And you mentioned the cryptocurrencies. Many would argue, well, it's Bitcoin taking a chunk out of gold here. As you know, these two assets like to be pitted against each other. And, you know, investors are frustrated because they see the returns on Bitcoin and they're looking at their gold investment. They're thinking, you know, should I be moving out of gold and going into Bitcoin? I've never really spoke to you much about Bitcoin. So I'm curious to get your thoughts. You know, how do you see these two assets? Do you see them as frenemies, nemesis, as two things you should hold, or is it something you don't touch?
No, I think they're totally different. I don't think it's a question of either I hold gold or Bitcoins. You can hold both. I hold more gold, but each person has to know what is more suitable for him. Mm-hmm. You understand? If you are young and you travel a lot and you have the ease to travel, it would be difficult for you to carry even 1 kilo of gold into the United States, because the highly educated immigration officer at New York or Boston or Los Angeles, he may not understand, despite his high education, that someone who carries a kilo of gold is not necessarily a drug dealer, a money launderer, and another type of criminal, and does not necessarily belong to the Taliban. But until you explain this to an immigration officer in the US, it may take you 3 days. So I'm not recommending anyone to deal with these educated people at immigration, although I've met also nice ones. But when you have Bitcoins, you can travel to the US and use them in the US, and nobody knows where you came from and where the Bitcoins are from. So that is a huge advantage of a cryptocurrency. Right. Now, I'm not sure that the Bitcoin is the answer. You know, when the automobiles started, there were in the US 240 automobile companies in 1908. By the 1930s, there were 30 left, and today, basically 2 are left, and they had to be bailed out. So maybe another cryptocurrency will come up eventually and displace the existing ones, but maybe not. So I would suggest to someone, you know, you hold some gold with a specific purpose, because, and even that can be taken away from you. I've written about the French Revolution. They didn't take the gold away, but they declared buying things using gold as illegal. And in some cases, it was taken from them. Also, Hitler, he took the gold away from Jews and so forth. So nothing, what I want to say is, don't try to say something is safe, because in a money printing environment that we have, in an authoritarian government that we have, that could close down your shop and tell you you have to stay at home and you're not allowed to smoke in your garden, in your own property. In such an environment, nothing is safe.
So there's no such thing as a safe haven. There's no safe haven, not gold.
Well, the safe haven is to have a big case of beer at home and whiskey and cigarettes and so forth. You understand? But anything else, and history is full of examples where people have lost everything. So my view is you have to be diversified. And I think, and your research frequently talks about this also, is to have assets overseas, not buying the shares of Sony or of Daimler in the US in custody here, but to have a custody in Europe, a custody in Asia, and a custody maybe in Australia. So to have money in different jurisdictions.
You know, you just made me think of a point. I'm interested to get your thoughts. You know, we're talking about Bitcoin Gold, about the Fed and other central banks' moves towards digital currencies and how we'll be moving towards that in the future. What kind of world can we expect there, Dr. Faber?
They may move to digital. It's of course much easier to print money in digital than in paper money, because to print paper money, well, nowadays most money is no longer paper anyways. Credit cards and prepaid cards and all kinds of credit instruments. So it's not paper anymore, but it's very easy to increase the government can increase the supply of cryptos very easily. But I think we will move to a system where, you know, in the time of our parents, you went to a shop and then you paid with a banknote. and you got coins, and you then went somewhere else and paid and got coins and so forth. I mean, this is the world I grew up with. Both my parents, they paid always and everything with cash, nothing else. Later, when my mother was over 70 years old, she had a credit card for emergencies, but for no other reason. Same for my father. I also pay mostly in cash. I prefer cash. Doesn't leave any traces behind. But in future, this will be gone.
Right. Right.
It will be gone. Bank notes will be a collector's item. People will hang them up at home in museums and so forth. It will be gone. So I think that there are many changes that will come. It doesn't mean that your $100 bill will become worthless, but I just want to say the following. I watch frequently old American movies because I think there was a time when Hollywood actually produced very good movies. The time is over for a long time already, but say in the 40s and 50s, Hollywood, that was the golden age of Hollywood, they had very good movies. And there's a movie where the gangster, played by Humphrey Bogart, by the way, when he was relatively young, he arrives in a village and gives to a doctor a $100 bill. And then the doctor goes and buys some groceries or pharmaceutical products in a shop in the village. They had never seen a $100 bill because it was so big.
Right. And now what's a
Never before. It has had a huge value at the time. And nowadays, the value of paper money has, as you know, gone down a lot.
Absolutely.
So if your grandmother and my grandmother said, oh, I don't trust anything, I keep everything safe in cash, they lost out enormously compared to the asset inflation, to owning a house, to owning a portfolio of stocks and so forth.
Well, I was going to say, you know, if they will become relics, and that looks like that's the road we're headed to, these banknotes, doesn't that make the case for assets like Bitcoin or Ethereum or gold stronger?
Yes, I think so. But it makes the case for owning something,
right,
like real estate and stocks. That's why I tell people they should diversify. Have some money in stocks, have some in real estate. You know, if you like a house, then buy it. It's not about it's about lifestyle. If you like something, you should buy it if you can. Then you have your house. Then you should be happy if you own your house. You have no mortgage, no money to pay every month, but you have to pay tax. And that is a potential problem. Before governments go bankrupt, they'll tax asset holders. And you know, we have a strong socialist movement around the world. For what, I don't know, because I've seen with my own eyes the disaster that socialism produces in countries like Eastern Europe, the Soviet Union, Vietnam, China, and so forth.
I want to bring it home here with a quote from your September edition. You said, now let us also assume that the chaotic and disorganized US military withdrawal from Afghanistan is the template of how dysfunctional the US government works. In this case, we should be prepared to see this dysfunctionality to show up also in economic policies, the economy and asset markets. And if that were the case, we should assume that foreign investors into US assets will respond negatively. One of the first casualties of foreign investors' loss of confidence would be the US dollar.
Correct. I think the US dollar is about as doomed as it was in the late 60s. But you understand, the US dollar in the late 60s was overvalued in 65 and overvalued in 1970, and it took until August 71 to devalue. But then it went massively by approximately 70% over the next 10 years until 1980 against other currencies, kept on going down. And I think the US dollar is much more vulnerable than people assume. I think, but at the same time, I have to say, the dollar is very vulnerable. But the other currencies are not much better. You understand? You look at the policies of Draghi and now of Lagarde in Europe and so forth. I think the ECB is even worse than the US. I have more confidence actually in Asian currencies because the Asian central banks are not as dependent on asset inflation, or they don't like the asset inflation as much as the US. So I think that actually all currencies could go down in value. You get the picture. Not like in the 70s, the US going down and the others going down. I think in concert, they could all and have all lost purchasing power.
Is the US at risk of losing its reserve currency status?
Yes, there's no question about this. There's no question about this. It will lose this status. Most countries have lost it anyway. It lasts for 100, 150 years and then the countries lose it. And especially in this world where you have these huge geopolitical changes, you have these economic changes, you have changes in technology. I think maybe in 10, 20 years' time, there's no reserve currency left. It may be a very different environment than people imagine today. I mean, I was familiar and I had studied plagues. I was interested in plagues already 10 years ago because many wars were won by plagues. In other words, the American native population and the Latin American population, they were decimated not by the conquistadores from Spain, but actually by illnesses. But I would never have imagined that following an outbreak from a lab in Wuhan under controversial conditions, there would be so much lying and so much political intervention. You understand? That the virus escapes, okay. But that then governments can go and close down entire countries and economies and not kill people because of the virus, but kill them economically. People never realize how many lives have been destroyed entirely because these were small businessmen. They had saved, they had opened a bakery or a coffee shop or a tattoo shop or God knows what. But they were destroyed by our governments, where we are educated every day in school that we are free because we have democracy. The whole system, like Afghanistan and before Vietnam, is built on a huge lie. People are lied to. If you want to be a government official, you only have to go to one school. How do I lie? Perfectly. This is the education that is required to be in Washington.
You've left me speechless.
But you see, what I object to the most is that people of influence in the US, they sit there and watch this and they do not speak out. I think it's very important that the public is being well aware of the idea of a democracy was that we would have a government that would represent the interest of people. What we have today is a government that is contrary to the interest of the people. That is what democracy has produced. And you may argue against the feudal system and against kings, whatever you may do. But the fact is, a king, if he was very bad, they chopped off his head and killed him. And in a democracy, everybody is hiding. Oh, I didn't know, and it's his and that and so forth. They all protect each other. And to chop off the head of the whole of Washington, you need quite a few guillotines.
So many truths right there, Dr. Faber.
But I feel sorry that actually also in academia, most professors, they know that something is wrong, that they no longer have freedom of speech, but they don't dare to speak out because they're afraid to lose their jobs. This has become a very, very serious situation. And I think that investors have to know about this, that they're being lied to by the government and by actually journalists who write articles that are very biased.
And the question at the end of the day is, how do you protect yourself against that? How do you protect yourself?
I think that Stansberry research and your principles are basically freedom-loving people, and they understand what the problems are. Mm-hmm. But I equally think they should speak out more strongly against the government.
Yeah. My audience is definitely freedom-loving individuals, and they will appreciate this talk. Dr. Faber, I know I thoroughly did. Let's not wait so long for the next one, okay?
Okay, thanks a lot.
No, thank you.
Thank you very much for having me on your program, and I wish you all well. But as I said, nothing is safe, and you have to diversify. And I think that asset markets, historically speaking, are very high. But some assets, if you talk about a farm somewhere or a house in a small village in Italy, Portugal, Spain, Sicily, Greece, Croatia, and so forth, all these places, you can, in some places, they give you a house.
That's right.
They hand it over to you.
That's right.
So when we talk about assets, some are expensive and some are low.
Not a bad idea. Buy a house in a small village in Italy.
Yes, I think nowadays you don't need to be in a city center. You can be anywhere. I'm in the north of Thailand. I'm very happy here because it's a nice place, but it's not in a major city. So the lockdown hasn't affected me. Right. I have a large property, so I don't mind never going out. I'm in my garden, basically.
Right. Well, I hope to see you in person soon, Dr. Faber. Thank you for joining us on StansberryInvestor.com. We'll have much more for you. And for the folks at home, if you'd like more premier content, don't forget to sign up at DanielaCambone.com. That's it for me. Thank you for watching.